Back on April 15th last week, 11 days ago, you announced that results that the shareholders overwhelmingly approved the creation of a new class of exchangeable shares of Canopy Growth, enabling you to accelerate within the US THC market, which basically paves the way for Canopy USA, we all been talking about. 3 days later, you announced the CBI conversion to exchangeable shares. So for those that don't know, what are the implications then of Constellation Brands, the parent company of Canopy, exchanging all their shares for exchangeable in CUSA? Like, how does this work? Hey, everyone. Thanks for checking into our latest Traded Black podcast. I'm your host, Shad Dales. A lot of you have been reaching out for the past week concerning Canopy Growth, their press releases from last week, and if we could have some better understanding and direction on how this is all structured. So that's what we're giving you here this morning as we welcome back in the CEO of Canopy Growth, which trades on the NASDAQ under the ticker symbol CGC, David Klein. Good to see you and great seeing you last week in Florida at the Benzinga Conference.
Yeah, thanks for having me on, guys.
What'd you think of the actual conference? Nice weather, good little venue, but saw you busy meeting with a lot of people. I know we wanted to connect at some point, but it looked like you were in back-to-back meetings all day.
Yeah, a lot of passing people in hallways, but I feel like there's a momentum in the industry again. There was a little bit more positive,
felt that too.
upbeat there.
Yeah, the industry felt alive. It was the first time in a while where the energy actually felt like upbeat. It wasn't like, all right, we're just all here going through the motions. Everyone's seeing each other now.
Right.
Yeah.
Get me out of here. It was good.
Was very much all business, but we had Dan Aarons on earlier this week from Advisor Shares, and he said, look, we don't know timeline-wise as to some of this stuff when it'll happen. There was positive momentum, and there was nothing negative, and I think that's the key is why there was so much optimism when we talk about the actual conference itself. But to your point, all business, a lot of positive momentum. There wasn't much negativity that was spoke about in comparison to, say, 12 months ago when this our conference took place. So that was the key difference, right?
Right. And the industry is still kind of going through that storming and norming kind of activity set, and so even the more the principals in the industry get to spend a little time together, I think we get better, and that interaction I think is the important part. And honestly, I think we need to do more of it as an industry. It seems like we're awfully adversarial for being such a young industry that should be working together to like make the pie bigger for everybody. And so I'm seeing a little bit of that happen now, which is great.
Yeah, I think the progress that's made within the industry, and I'm sure you agree with this, Anthony, 1 or 2 days face-to-face proves to be very beneficial. I know this is fine as far as virtual, but we definitely need to get face-to-face more as far as like the early stages of this industry. But listen, we wanted to have you on. There's a lot of people that have reached out to us as far as our viewers. And on today's podcast, we want to tackle 2 press releases from the past 10 days, knowing many of our viewers, as I said, had questions pertaining to and how this is all going to be structured as far as like, current Canopy shareholders and some of the announcements that were made. So first begin, back on April 15th last week, 11 days ago, you announced that results that the shareholders overwhelmingly approved the creation of a new class of exchangeable shares of Canopy Growth, enabling you to accelerate within the US THC market, which basically paves the way for Canopy USA, we all been talking about. 3 days later, you announced the CBI conversion to exchangeable shares. So for those that don't know, what are the implications then of Constellation Brands, the parent company of Canopy, exchanging all their shares for exchangeable in CUSA? Like, how does this work?
Yeah, first of all, it's really good news for us. And Constellation worked very closely with the company over the last 2 years to come up with this structure. They really wanted to stay in the stock, but they also wanted us to maybe take a few more risks in terms of how close we came to the U.S. market. And so they worked with us, came up with this exchangeable share concept, which really was the point of the vote. They've moved into exchangeable shares, which means they're non-voting shares. And it also means that they no longer sit on our board. So they're no longer in a controlling position, which is actually what they were seeking to get to. The interesting thing for us is they still remain shareholders of our company. And in fact, they remain our largest shareholders. And they're in a class of shares in the exchangeable shares that don't even trade on an ongoing basis. So Constellation is here for the long run. And they even doubled down last week. We had a debt instrument that was outstanding for about 100 million Canadian dollars that Constellation chose to equitize at values where the company stock is trading today. And so I think that's that speaks loudly in terms of how Constellation's thinking about the investment.
Encouraging. Go ahead, Anthony.
So now that the vote's done, now the Constellation's changed into the exchangeable shares, you've now got these three assets: Wana, Jetty, Acreage. Walk me through that. With two of them being private and then one of them being public. So I mean, walk me through that process. Like, how do those assets now get amalgamated? Are there trigger events? Are there covenants in the certain agreements that now the CUSA, I guess, ratification now triggers it? Walk me through how those all get put together.
Yeah, so over the next several days, we will exercise our options, in particular on Jetty and Wana. And those are going to be simpler because they're in fewer states. The regulatory process will be faster. And so you'll see that coming out shortly. Then we'll exercise our option on Acreage. That's going to take a lot longer because they're in so many states. But we'll start that work of putting the businesses together in a way that we think creates meaningful synergies for the businesses.
Okay, and then once they are amalgamated, I mean, obviously they have their own management teams right now, all separately. There's the management team at Canopy Growth currently. How is that asset going to be run, the CUSA asset, on a day-to-day basis from a governance perspective?
Yeah, so the business, so Canopy USA is its own business. That's kind of held out separately. There's a board. It will be run by a board of managers, almost like a European business has a board of managers. So it's not really like a board of directors. It's a little more involved than that. I'm one of the people on the board of managers, as is Nancy Whiteman, and as is an individual who represents another third-party investor that's coming into Canopy USA. So the business reports, each business will report into that board of managers. And over time, we'll build out more of a leadership structure. But for right now, the leadership teams at the individual businesses reporting into that board of managers are being asked to go out and create as much value as they can.
So when you mentioned like combining U.S. assets, and you also mentioned synergies as well, like, do you expect to generate revenue and costs from these synergies? Like, is there anything that you could shed a little light on? And is there anything, I guess, major off the bat that will boost margins, to say the least?
Yeah, so look, the first thing is it's very costly to be a public company in cannabis. There's a cannabis tax that gets applied on every single service that we require, whether it's D&O insurance or audits or legal support. Everything that we do seems to have a bit of a cannabis tax associated with it. And so we would no longer have the public company costs associated with Acreage. That's a big kind of cost removal from the business. We also plan to share wholesale sales forces so that we can get Wana and Jetty and the Acreage brands on the shelf kind of together. And I would even include Stores and Bickle in that as well. We want to take out a really nice looking high-end bag of product out to all of the dispensaries in every market that we participate in and try to get on the shelf, where we can. And then, we'll continue to work together to drive down production costs, knowing what we know about producing in Canada, perhaps, or knowing, Nancy's experience or Nancy's team's experience, for example, and how to best run a kitchen. Like, we'll work those things across the business, which we think will help margins. And, look, the whole industry is waiting for rescheduling. Doesn't necessarily affect margins, but certainly will have a massive impact on cash flow.
Encouraging.
Yeah. So from an operational standpoint, I mean, bringing these three together, once they're stabilized, I mean, what's the strategy on a go forward basis? I mean, I'm assuming it's creating those efficiencies, starting to drive revenue, stabilizing the portfolio of assets. I mean, is it get more aggressive on the M&A front and add complementary markets? Is it go deeper into the current markets that Acreage is in? Or has that even been talked about? As far as
it's been talked about a lot. And we've been working on these things for a while. So it's not like we're coming from a standing start right now. But I think, we continue to be interested in, first of all, accelerating the businesses that we have, accelerating the penetration of, say, Wana onto, all of the dispensary shelves wherever we can be. Same thing with Jetty, which is really just in Colorado, California. They're a little bit in New York, a little bit in New Jersey. We think we can expand that a lot. And then look beyond that, I would say that our preference is probably brands over production capability and retail capability. At the same time, we will be opportunistic around getting deeper in the states that we're in with current production assets. So I think this is just the starting point. And unfortunately, it took us 16 months to get out of the starting blocks, but now we're out of the starting blocks, and I think it gets really exciting from here.
So, I mean, I think you bring up a pretty good point as it relates to Jetty. I mean, Jetty's a legacy brand in the space. They've been around for a long time. They've mostly been siloed to the West Coast. I mean, it is going to be interesting to get Jetty into the East Coast presence that Acreage has with that portfolio and really start to drive brand awareness coast to coast. Because it is a good brand with pretty good product that I've sampled before.
It's a great brand that people that have been around the industry a long time, call it out when they talk about some of their favorite brands in the industry. We think there's a lot to be done with it, but just like we like to stand behind the innovation at Wana and try to drive growth through innovation, we'll continue to do that with Jetty products. They've kind of been leading the way in solventless in California. They also are, OCal certified, which is as close as you can come to actually being organic. So they have a different approach to the market, and they've been doing this for a long time and making great products. And we're really excited to get those products into the New York market and the New Jersey market, and then expand beyond those.
So when you look at like forward-thinking statements as you're combining all these assets, what happens in your next earnings report? Like, how will the numbers from CUSA, I guess, be reflected when you report next?
Yeah, so just to temper expectations there, it'll be the reporting period after we close. So we're going to exercise the options. We go through regulatory clearance, and then once we've closed on the transactions, we'll start the reporting. So it probably won't be our next close. It might be the one after that. Okay. Although I would expect that our next earnings call will talk about the numbers a little bit, even if they're not disclosed, right? But what we'll show the full financial statements of Canopy Growth, and then we'll show the full financial statements of Canopy USA. We're not consolidating those, but you can effectively add them together as a shareholder so that you understand what does growth look like, what does cash flow generation look like, what does profitability look like. You'll be able to get the entire picture of the entire company,
which investors will appreciate a lot. I think there was
now that you've taken the step. I mean, Canopy is listed on the NASDAQ. It's accessible for, let's say, some institutional money, as well as high net worths to get via their broker. I mean, has this CUSA transaction getting the momentum it has in the last 2 weeks? Have you had any pickup from conversations with institutional investors or interest from institutional investors now that this is actually moving forward?
Yeah, we've been having a lot of discussions with small institutions as well as large family offices, if you will. We've been really working in that area. I think the accessibility to the NASDAQ, I think, is helpful to us. Look, a couple of weeks ago, there was a day I think we moved over 60 million shares in one day. It's a crazy amount of liquidity in our stock, and so I think that's good for us, of course. But we need to deliver with the core business, because then the core business delivering. That's why I'm so excited about Canopy USA, in conjunction with the liquidity that we have on the NASDAQ. Really is super positive for us.
Yeah. And then, I mean, we've always been talking about the U.S. a lot. I mean, CUSA is a big part of the narrative moving forward. I mean, how's Europe progressing with the news in Germany? Obviously, with the S&B asset, that's quite a popular asset over there. What's the breadth and depth of the exposure to the EU and to Germany, and how's that looking?
Yeah, so in Germany, we're a top 3 player in Germany in the medical channel, but the legislation, despite all of the discussion around the legislation in the US, it would almost feel like it's total adult use. In Germany, all they've done is they've really loosened things up a little bit around the medical market, and so we're already there. And so I wouldn't see a big shakeup in that regard. We're starting to see a lot more.
Were you disappointed at all on how like everything kind of was announced with Germany? Were you expecting more?
No, we're good with the medical channel, because that's where we're strong today, and so I think over time we'll get more. But the early returns are we're seeing more scripts in Germany being written, which is what you would have expected. It's easier for the doctors to write the scripts now because they're not treating it like a narcotic. We're seeing a drop in kind of average order value, which you might expect, right? So people
Yeah.
just kind of waiting in. But I do think we're going to see, like every other market we go into, there are all these expectations it's going to explode the moment the market opens. It's going to take a while, but we're going to see, I think, just a pretty steady and really exciting build in terms of the dollar sales in Germany.
That's actually great to hear, because I mean, one of the major pain points that we were hearing pre Pillar One getting ratified and put into practice was that physicians were scared to prescribe cannabis, due to its narcotic status. Even if a patient was valid for it, they were very afraid, and just weren't prescribing it, with the risk of losing their license. So I mean, to hear that that's loosened up, and with it coming off the narcotics list, the velocity of prescriptions are starting to increase. That bodes well for that market, because that's one of the main identifiers that I've been waiting to hear was, are doctors starting to prescribe at a faster velocity, and then getting patients through the system? Because I mean, we did see we thought adult use in like the US sense, and it's really a decriminalized or fully descheduled medical market. When it all pans out. But I mean, it's great either way. The status is awesome, and we're hoping the pillars roll out moving forward.
I think the big thing in that press release was the fact that making it easier for doctors to prescribe. I think a lot of people are very optimistic about that. I think they want to understand and learn more as to how much easier it will be and how receptive they will be to that. But have you had conversations that kind of indicate backing up those statements from what they plan to do over the next year or two?
Yeah, so I haven't, but my team has, and there are doctors that are feeling more comfortable, and so hopefully that happens in Germany as the doctors themselves get more comfortable with it. Then they start to feel like they're not doing something that's on the edge, and that's when we'll see a real uptick in consumption.
What was this tweet that you put out this morning, Anthony, earlier this week, pertaining to comparisons of alcohol and cannabis and the approval amongst Americans? Was that?
Americans are now polling that cannabis is safer than tobacco and alcohol, which is true. I mean, if you look at the medical data, you can't. I mean, we like to say it. You can't really die of an overdose of THC. If I put a bottle of whiskey on my desk and just chugged it and kept drinking it, I would eventually get alcohol poisoning and die. Nicotine, I mean, the carcinogens, we can go into a whole different story. But yeah, I mean, the safety profile of cannabis is starting to become recognized in the mainstream. I don't know if it's the HHS recommendation. I highly doubt people are reading a 255-page document from the government. But if the societal norms are trending in the same way that document is recommending cannabis, then it's a win-win for us. The work's getting done without even really having to try.
Yeah.
So a couple times in my career, I've been fortunate enough to hit a macro trend, and one of them was when I worked at Constellation, and we were doing Corona and Modelo in the U.S. And the trend that we wrote on was the growth of the Hispanic demographic was growing about twice as fast as the Caucasian demographic in the U.S. And Modelo and Corona over-indexed with that cohort, right?
That's interesting.
And it carried the company and the brand. Right now, the macro trend is 69% of adults under the age of 35 prefer cannabis to alcohol. And that's going to go for a while. And so you're not going to have, it might not be, 10%, 20% market growth in a year, but that compounding of a big market like cannabis, $40-50 billion market, compounding at 3, 4, 5% over the next 10 years is super exciting. It's why again, everybody walking around Benzinga, it should be pretty excited if you can, keep the wheels on the bus until we get past all the regulatory morass.
I think that's the big thing.
With the younger
people can see it and visualize it now.
With the younger demo, it's no hangover. I mean, it's nice. I mean, I'll be first to admit. I mean, Saturday I probably consumed a little bit too much. Woke up Sunday morning, felt completely fine. Hopped out of bed, at the gym at 7 a.m. No hangover, no nothing.
Yeah,
that's the beauty of cannabis.
It's
people are realizing that at an alarming pace.
Yeah, it's the lower calories. It's even the different effect. You
Yes.
know, and so I just think there's just so much room for the industry to grow. And again, when you're thinking as an investor, you can decide that you have to be really smart and pick the perfect product and hope it hits, right? The best thing to do is to pick a trend. And
Yeah.
cannabis is that trend. And then you pick that trend and then you decide who in the space understands what's happening in the space and is well positioned to take advantage of it. And then just see what happens. And
Yeah.
again, I've said this several times to people. I said it at Benzinga last week. You know, the Constellation investment, the beginning investment that was made in 2017, the
Yeah.
assumption on that investment was that cannabis would be federally legal. We don't even know what that means anymore, by the way. But we said
Yeah.
federally legal in 2023. It didn't happen. The thesis was right. The timing was
Oh
wrong.
yeah.
And
Yeah.
so now I think the thesis remains the right thesis, and it just feels to me like the timing might be right. There's been some fits and starts in the industry. We're getting at least closer to understanding what
Yeah.
regulatory reform we can get, which might be descheduling and safer banking. That might be what we get for a while. But you know what? Knowing that, we can all build really good businesses and
Yeah.
create value for our shareholders.
Yeah, and I think you nailed it because timing has been anybody's guess in this sector. But the trend is absolutely undeniable. The use, the societal acceptance, all of the numbers just keep going up and to the right. So, I mean, if we can get out of this regulatory quagmire, not unscathed, but at least with something to fundamentally change the businesses for the better, I think it's just going to accelerate the trend that we're seeing now greatly.
We're learning a lot, that's for sure. 40,000-foot
Yeah.
view then. You know, when we think about how much we've learned in 2023, you're hoping that we have federal legalization. It's not here, but we have learned a lot and we understand. So when we look at this, do you believe that Constellation, knowing that they are fully committed to this long-term based on some of the stuff that you said prior, does feel that we could have rescheduling at some capacity like that relatively soon? Because that's a bold statement, obviously, to have the backing of a company of that size. And let's face it, they've been involved 6 years now, which you can't believe how fast time flies. But what's this say to your group of shareholders moving forward? Because I know you had a lot of questions heading into this year. The earnings was a step in the right direction. You make this announcement and you have the backing of a company like that. So what's the statement that you want to communicate to your investor base moving forward as we move into the middle part of 2024?
Yeah, I would just double down on the fact that last week Constellation converted $100 million of
Right.
Canadian dollars of debt into equity because this is a good entry point. And
Yeah.
you know, I think I would make that case in general that this is the thesis remains right. This is the entry point.
Yeah. Well, 400 million traded, I think. What was that stat that you said of like a week or
Like
2 weeks ago, Anthony?
it was around 420 million and change. I mean, the volume
Yeah.
was crazy.
So the
But yeah, it was
popularity
around
is
60 million shares traded.
popularity continues to be there. But listen, appreciate obviously catching up with us to provide some more clarification. Anybody that has any questions for David, if we missed anything, leave some comments below. Let us know your feedback. We'll make sure to reach out to the team and get the questions that you want answered. In the meantime, David, thanks for checking in, and let's keep in touch.
Yeah, great to see you guys. Appreciate
All right.
what you do.
Thank you, sir.
Thank you. Hey everyone, thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.